Hi, good afternoon, guys. So, how has been your day so far? All good? Right. So, tell me, how many of you actually? Yeah, let's begin with some interactions, right? How many of you are actually planning to raise funds from a VC? Okay, few hands there. Okay, all right. Uh, yeah, for those who don't are not really raising it, also will be useful to kind of take a look at what we are discussing today. May be relevant for you guys at a later point of time. And who all were there in my earlier presentation in the day? Some of you, I had a small session in the afternoon. Yeah. So that kind of set the context, and I wanted to keep it very high level in that gathering. But yeah, this is like a more focused gathering for me, relevant folks, you out there, so you understand what a startup journey is. Some of you are already living it. So let's jump into the session, and we'll please do feel free to kind of stop me wherever you think. So let's make it interactive. I'm sure you, all of you, have a lot of questions in your mind, and some of them I probably would have tried to address it. But if not, then on that relevant slide, please do stop me, right? So we'll kind of keep on getting a break, talk to each other, and then move forward. Otherwise, of course, last mein Q&A to hai, so we'll pick it up. So yeah, I mean, before we jump into it, I thought we'll kind of quickly, for those who weren't present, this is a little bit of a context, right? So the context is we saw a wave coming last 10 years back, right? It started in 2012, to be honest, and 2012 was a time when you really had the AIF regulations come in. SEBI, as you know, kind of governs listed companies, and they came up with a regulation called AIF regulations in 2012. It was mainly to govern private equity funds and venture capital funds, right? Because till then, venture capital fund was pretty much unregulated, if I have to call it that. So SEBI kind of very focused way, they created a regulation, which of course SEBI kind of is the ultimate regulator for us who are running funds of VC funds. So that really marked actually the importance of like a inflection point for the funds to kind of come in, get regulated, get registered, and then in a very institutional manner invest. Just like you've seen large PEs, private equity funds, I'm sure you've heard of larger names like the KKRs and the Blackstones of the world, but these are very large funds and those are called PE funds. The distinguished thing is VC funds typically write smaller checks, come in much earlier than a PE comes, right? So that's very important to note before targeting an investor. So this really happened, right? So first wave was the set of early stage startups coming in, raising lots of funds, and there was a euphoria about the startups. We really tried to kind of imitate US. We thought we will, to a certain extent it did. But then eventually what happened was, a lot of investments did come in, a lot of funds set up by companies, by larger fund managers who kind of stepped out of their funds and started their funds, right? So that happened all between 2012 to 14, 15. A lot of investments went in and till COVID kind of hit. And even after that, like 2022, there was a small blip and then again investments kind of took up. 21, 22 was a golden period where I think a lot of companies got funded. Some not so worthy, but a lot of them did get funding. There was a funding frenzy after COVID, so to say. And that brought in the correction, right? Which is probably a much needed correction. Investments were frothy and it was a founder's market, so-called. The founders were naming their price and the investors were feeling that FOMO and investing, which had to kind of correct itself, right? So that happened somewhere about mid of 22, so which is why we call it the gap. The gap is between two waves, right? Some of you who are also investors in public markets do understand the wave theory, right? Markets don't go up in one direction. So there always is a healthy correction that takes place. So that happened and I think it's still going on and we probably, hopefully, fingers crossed, are at the end of that correction, right? This is what we feel. Some of you may disagree, some of you may agree, but that's my viewpoint. And there are a lot of events that are going to take place which will probably, we can only know in the hindsight. Elections and then the budget. I think these are two major events that are coming up, and which is why you see a lot of uncertainty both in the minds of investors and founders. Because nobody is sure, right? क्या आएगा budget में, क्या होगा? You might probably be very sure about this government at the center, but you don't know which government at the state and etc. till the state elections also take place in your respective states. But largely these are governed by the central government, right? A lot of changes that happened for the startup ecosystem have typically happened at the central level. So it's very important to get these events behind us to be able to have a stable environment, a predictive environment in which investors know कि अच्छा चलो next 5 साल तो we know that this government is there, or those policies will be there. And we feel in this current budget that will come, which will come in July, which is post the elections, will bring in the next set of transformational reforms. So structural reforms were done in 2014 onwards, and 18-19 we saw demonetization, GST, all of that, right? It's all behind us. We never knew we'll get through those, but we did get through those. And you see GST collections all-time high, income tax collections, revised collections target being met. So there's something happening structurally in the country, right? Which to the naked eye of a single founder or a company is a little bit difficult to fathom. But then you have to understand the macro picture to be able to know where you're operating, what is driving some things that people tell you, investors tell you something, where are they coming from? It's very important to know. Which is what I think the second wave probably will start from 2024 mid, once all these events are behind us. And we are looking at a sizably 10-year long period again. One level of transformation happened in 14 to 20, 12 to 22. Another will come from 24 to 34. This is our prediction. And you will see this is a golden era probably for startups as well. Right? So we feel bullish about the whole thing, to be honest. And these are the reasons why, and I think we discussed in the previous session, but I'll not go into detail. The topic here today is how do you raise funds from a VC, right? So let's try to decode that and see if we really are able to decode. So for that to know, these are the 5 things you will need to understand, okay, very clearly. And थोड़ा ध्यान से पढ़ो, all 5 are very relevant. And they are in stages. They are actually 1, 2, 3, 4, 5. Not to be read in random order. One is, first of all, ask yourself, why do you want to raise funds from a VC? Right? There are a lot of conventional capital available. There's bank capital. There's this individual investor with loads of money available. Why VC? Please feel free to answer your question. I'll answer all those, but why do you think people want to raise money from a VC? What's your guess? Any guesses in the room? Capital के अलावा value addition tough है थोड़ा VC से. I'll come to that. It's a very valid question. No recurring cost. So you think the money is free? The VC money comes for free? हाँ, interest liability नहीं है. But there's a bigger liability than that. The liability is of returning capital with the return. So very few understand that that is capital that you have to pay back. It may sit in your balance sheet as share capital, which technically to an accountant seems like not repayable capital. But that's not the way the math works. VC money is actually coming at a higher cost. So if you really are getting debt, my recommendation to everyone, and I don't think you are expecting this from me, but if you are getting debt, to take debt first. Take debt and grow your business to the extent of the leverage you can take. And only then, once you've extinguished those sources, should you look for an equity investment. Because VC is an equity investment, right? We all agree. There is debt VC. वो सब बाद में बात करेंगे. Debt VC is a different ball game altogether. Revenue-based financing. Debt VCs have come in, Ulterior Capital, all of those. I'm sure you know the names. Those guys also fund startups early stage, but only after a significant equity round. Nobody comes in very early. Aajkal there are sort of debt VCs, also smaller VCs coming and putting in checks. But that's from capital. I'm saying if you really want to travel this VC journey, you will have to undergo a change of mindset. Right? So first, we'll try to answer this question. Right? Second is, okay, लेना तो है आपको, लेकिन वो अगले को देना है क्या आपको? Does VC really want to give you? That also you need to find out, right? If VC doesn't want to give you, then no matter how hard you want it, you will not get it. Which means the second question is, are you a VC fundable business? So we'll try and understand, are you a VC fundable business? Right? So I'm sure a lot of questions are coming in your mind, so hold your horses, we'll come to that slide. Understandable, okay, fine. If you qualify to be a VC fundable business, then obviously when you talk to a customer, you try to get into the mindset. So you obviously want to understand, right, what a VC is thinking. What is his mindset? If you understand the person, you've understood the problem. Correct? That's what 99% of the times happen. You have to know the person to know that he is able to solve the problem. And of course, then after understanding the mindset, what is he looking into your startup or your company for that matter? And by the way, just to kind of clear the air here, if some of you are registered before 14, 15 or those kind of time frames, you technically are ineligible to take money from a VC. You might have to shift to a new entity and transfer all your operations, because a new company which is incorporated after I think 8 years or something is a time frame in the startup recognition system, is where you are eligible from a VC. Otherwise, VCs can't fund traditional old businesses which are incorporated beyond a particular time. So that's a little bit of caveat. But so again, what will you see? What does a VC look into a startup? And lastly, of course, the $1 million question that we'll come to, right? What valuations? It's an interesting topic in itself. We'll try and crunch it in the time that we have available today. But yeah, we have like a 3-hour masterclass just on valuations, by the way. Okay, so the first question. If you do not wish to part with your equity, then you have, you are on a wrong road. Then VC is not your game. If you are too close, holding your chest tight closely to your equity and you don't want to part with it because it's too dear to you, then probably you are in the wrong business of a VC business, right? You can run a traditional, we call it the lifestyle business. Lifestyle business क्या होता है? जहाँ पे ओनर ही सबका इक्विटी ओनर के पास ही है, उसके ऊपर से उसके लड़के लड़की को जाएगा, उसके नीचे जाएगा. फैमिली रन बिजनेस होता है ना. They are the ones who hold to their equity very tightly. And by the way, nothing is right or wrong here. I am not for a minute saying that is wrong. If you are able to run that business profitably, growing it into a wealth that you yourself want, then that's the business you should do. Then you should not get into a VC road, a VC journey. Because VCs will not put money if you are not able to part with your equity. Which means dilution, right? Dilution means that. I'm not going to go too technical here, just for the sake of the audience here. But yeah, you'll understand all of these terms once you start raising money from a VC. Also, communication with a VC. All these learnings are from last, I would say, whatever years. But yeah, running 100x VC. And previous to that, I was with Bessemer, which is the leading VC fund in the world. They are one of the top 5 globally. So I had the opportunity to work and understand what VC means actually. Most VCs in India today do not understand how a VC should function. So that is the very important point here. You should know how to communicate. Your communication with a customer and your communication with a VC has to be entirely different. Okay? Answerability. If you do not like to answer questions, okay, so then please don't take money from a VC, because he is going to ask questions. Or she is going to ask questions. She will constantly ask questions before the investment and after the investment too. So if you do not like to be answerable, then that's a very important point to consider whether you really want money from a VC or not. It will not work if you take the money and do not reply to them, do not care for them. कि ठीक है पैसा तो आ गया ना अभी, it's okay, हो गया. Yeah? So if that is not the nature you have, then you have to think twice. And of course, do you have limited resources? You're feeling crunched, right? You're not able to hire good people. You're not able to hire good talent. You're not able to put up facilities. You're not invest money in technology. Capital constraints, to put it in a nutshell. Which is why you go to a VC, because they hold large sums of money, so they are able to fund you in the way that nobody else can right now, at an early stage especially. And yeah, of course, governance, I'm sure in the room everybody knows what is the importance of governance. So simply, governance, by the way, does not mean corporate governance only. What is mandated by compliance is not what I'm talking about. I'm talking about something more than that, which you basically do even without the company law telling you to do it. Which is what a VC will expect if you really take money from them. And of course, VCs are not your friends and family, so they will not bear the loss of their investment. A friend and family might, but not a VC. So that will pretty much, you have to facilitate. When you take that money, उस दिन ही समझ लेना कि ये 5-6 साल के बाद जाएगा VC. तो उसको पहले से exit path उसका बनाना पड़ेगा. This most, in my opinion, 90% of the founders do not even think about it when they raise these funds. देखेंगे ना, तभी तो 5 साल है ना, अभी क्या है, अभी तो धंधा करो, बाद में आ जाएगा, कुछ ना कुछ कर लेंगे, या तो कंपनी से दे देंगे, या किसी और VC से ढूंढ लेंगे, या कोई PE आ जाएगा. But that is very casual approach, which I think is the biggest mistake. The difference between good founders and average founders is this, that they start thinking about the exit of the VC right from day one, which will help you in charting 5-year journeys, not just for 6 months or 1 year. Right? That is important. Okay, having crossed this bridge, I hope if you understand all of this, then you probably want to take money from a VC, which is, then you have to come to these things. Are you a VC fundable business? There are 2 types of businesses, VC non-fundable and fundable. These are some of the traits of a VC fundable business. As I said, right, linked some of the points you will probably see some overlap from the previous slide, because that's what it means, right? If you have a low dilution, you've not already parted with your equity to friends and family and advisors and so on and so forth, then probably you are right for a VC check. So for example, when people pitch to us, the first question my team asks the founder is, how much diluted are you? So if somebody says 10%, 15%, advisor ko de diya hai because he helped me initially, then you're technically ruling yourself out of a VC contention. And why is that? Anybody can answer this? Why will you not value your advisor who helped you in your initial journey? तो ठीक ही है ना, help किया तो. I'll react to that. Any other guesses, estimates, thoughts? Because this is an important point. The cap table, I'm hoping everybody understands what a cap table is. Ownership pattern, share pattern. जब आप कंपनी बनाते हो तो 100% इक्विटी आपका रहता है. So you are the 100% owner in the cap table, right? That is called the cap table. But I'll answer to her thoughts, and it's not entirely true. True, yes and no. But the main point is, in the initial journey, founder always depends on mentors and advisors. It's required because he may or she may not possess all the skill sets, and that doesn't take away from the fact that he or she is passionate about that journey. So it's not about just the value, but what happens is, if you map the entire journey, आप कोई भी company ले लो, Swiggy's of the world and Ola's of the world and everybody, they've kept on diluting with every round, right? Every new investor who comes in takes a pie of the equity by investing whatever money. If you do not leave pie good enough for the VC to come in, then his first entry point friction is that. So if you have to leave that much equity on the table for all the VCs to come in and make you a bigger company, so like if you, let's say, want to do 1, 2, 3 rounds and then want to do an IPO, वहाँ तक के लिए आपके पास थोड़ा equity बचना चाहिए, right? Otherwise you will be in low single digits, which doesn't make sense. Which is why from the initial stage, if you save equity, then you will have something to give to these guys. That is purely a math logic. beyond what you just said. So what mistakes typically people do is people start valuing individuals too highly, sometimes more than deserved, and they shell out a decent amount of equity just on advice. The advisor is not there full time. So there is no rationale of that person getting 10, 15%, 20%. You are the one who is going to grow this company, not the advisor. The advisor takes equity from multiple companies and involves only fraction of his or her time. So you have to be very mindful of that. Now you get what I'm saying? That's a very important point. The captable piece. Again, all of these I'm sure you guys know, right? You have to, the third point I want to just spend 2 minutes on it. You will need to understand what absorption of last capital means. Why today India is a sought after destination for early stage funding and for VC funding is because India is able to absorb that much amount of capital. That is why funds are coming. Abhi Bangladesh is, GDP is X and ours is Y. So do you think too many funds will be able to even deploy capital there? We have this massive, 130, 40 crore, whatever it is, the population. And because of that is where the volume is. So you have to create such substantial business for your company to be able to absorb that capital. So you have to show traces of that. We'll just leave it at that, but happy to kind of chat on this later. You obviously will try to have to be asset light as much as possible. While I'm saying that, I don't mean to say hardware companies and hardware startups are not good VC businesses. There are enough and more examples of hardware guys making it big. Even in our portfolio, we have a few of them. Despite hardware run businesses, despite COVID, despite funding winter, they have got their rounds done. They have raised money. So wo wala, do never carry an impression that hardware led startups are not the favor for VCs. But while having said that, within the business, like I'm sure an IoT device deployment is necessary for your solution to work. A SaaS service or a data analytics to work on. It has to work on something, except if it's a cloud technology. Otherwise, you will need to be asset light. You will try to have to keep on reducing the cost of capex as well as investment by the customer and for yourself. How can you do that is what you have to think about. Which is the maximum that you can do there will attract that many points from a VC in terms of the tick boxes. And of course, the very important point is the last one. If you've raised one check from a VC or some investor, it doesn't mean your journey ends there. You will have to continuously grow and keep raising more sums of money because that expectation of a VC, and I'll come to that in a bit, is very different. He is not expecting you to say, अच्छा चलो ये check ले लो 5-10 करोड़ का और फिर करते हैं business और आप 5 साल के बाद मुझे exit दे देना. वो बहुत कम होता है. Or I'll tell you the reason why it happens, right? So you will have to return the money, like to the gentleman point. You will have to deploy that capital profitably or capital efficiency wise low because you will have to create that outcome by way of either a valuation or by way of profitability so that your business becomes much more valuable after that 5 years, which is generally the time frame by which you have to return the VC's money. So the VC's money will have to be returned either by way of a buyback by the company or by way of another secondary transaction, where another investor comes in and you get out. Any confusion so far, like any doubts? Okay. So what is the VC thinking, right? When he is talking to you, when you guys are pitching to them, always remember your observations will be very important. So will be his. So, and by the way, a lot of founders do not do enough homework when they pitch to VCs. You have to know who you are pitching to. If you do not know, chances are that you will fail. And which is the reason why you hear this common statement that 100 में से 2 लोगों को पैसा मिलता है. वो क्यों मिलता है? Because वो लोग अपना homework नहीं करते हैं ठीक से. ठीक है? They don't do their homework. They don't study the VC. They don't see what sectors that guy is invested into. Nothing. They just think it's a VC. किसी ने बोल दिया pitch करो तो pitch कर दिया. So that's why the failure rate is so high. And yeah, So just understand how a VC is thinking. So VCs like us, we are financial investors, understand that. So to your point, the value add is only in terms of a few things that I showed in the last session. Apart from the capital, we bring network of our own portfolio. So you can benefit from that. But please do not expect, kabhi mil jaye to theek hai, but do not expect inputs in your business from a VC. That's not why I am giving you the money. I am giving you the money so that you can work hard and give me return. I am not giving you the check so that I also have to work with you to get the customers to be able to get my return. उतना सब मेहनत नहीं करेगा VC. Clear है ना? So don't expect कि अरे उन्होंने कनेक्ट नहीं दिलाया सर, हम तो आगे नहीं बढ़ा बिजनेस. पैसा दे दिया तो उसका मेन ऑब्लिगेशन इज ओवर. If you can't figure out your business, it's just too bad. Then there will be a lot of bitterness anyway between you guys. So understand, the main purpose is that. So we also raise money from, जिससे हम पैसा raise करते हैं उनको LPs बोलते हैं, right? Limited partners. This is a common concept in the VC industry. We also have money coming in from families, institutional guys, family offices, corporates who invest in funds. So all the fancy fund names that you see, they've all taken money from either domestic institutions, corporates, family offices, HNIs and all that, or globally. So we also have to return to them, please understand. And our return is again same way like yours. Okay, we have to give it back with a due return. And by the way, we also have to keep something out of it, right? Our share of profit also is there. Which is why if you do the math properly, then the return that you have to give me has to be far higher than what I have to give my LPs. Because I have to keep a cut of the same too. Right? Which is called carry in VC terms. We have to keep, we as fund managers have to keep our share of the profit and return the rest. And a large chunk of it goes to our investors, but that's what is the math here. And they expect, of course, very high ROI because otherwise, see, they also know, right? वो लोग 10 में डालेंगे तो 2 चलेगा. तो वो 2 आप होने चाहिए, वही उसका expectation है. वो हर 10 में डालेगा, हर 10 में से उसको outlier चाहिए. Every VC is gunning for an outlier. And because it is right now a VC's market, all the more important that you have to be that top 2 that he believes will generate the fund's entire return. If I am investing from a, sorry. Yeah, so I mean, if you are running, let's say, a sales tool, sales enablement tool, where you are helping build, sales tools for your customers, to close faster sales. Like for example, today there's an announcement of a company called Shift Hub, got funded by Matrix. They are developing a sales enablement tool. Now, if they raised from Matrix, first of all, they have understood that Matrix understands that space. Second, Matrix invests in such SaaS businesses and B2B enterprises businesses. So those are the things that are very clearly, some of the VCs write it very clearly in terms of their website if you really study. That's what I meant by saying homework. Homework means not just that, but you also should know all the VCs who have funded B2B enterprises. They have had unicorns in their portfolio. I think unless you understand that, then and understand the team who you are pitching to, some of the teams are very clearly visible in the VC's website. It's all out there. There's nothing that is not transparent. So you have to do your homework. There is a clear format of a pitch deck which you have to prepare. You cannot go with your own thought of a pitch deck. Or maybe if you think this is everything that it contains, then yes. But things like competition, things like SWOT analysis, things like where else is this space got funded? Globally, who have been the bigger enterprises who have made it through? So who you are emulating? Who are you trying to be better off with? Those kind of homework. I mean, it's not just about your business. It's about others who are also doing businesses adjacent to yours. Because believe me, I mean, the VC is looking at all these companies, right? Including yours as well as your peers and your to-be competitors and your past competitors. So they have an array of bouquet in front of them. They can invest in anything. You just have him to go to, right? The problem is that they see this company, they see all the companies, they study very, very well. They have research teams who do a good job of it. So do not underestimate the investor when he is looking at you. So ये कभी मत समझना कि आपका स्पेस उसको नहीं समझ में आता है. They see much better companies than probably you are. But you, if you think you are the best, then there's a problem. You need to understand who else is operating in your space. That's what I meant by homework. No, that's regardless of any industry. High ROIs means I'm saying returns of 25 to 30% annualized IRRs, generally speaking, for any VC. North of that is what they expect. Because traditionally banks, etc., they are all going to charge you 12 to 13 to 15%. These guys will expect double of that because of the risk that they carry. Yeah, so I mean they are financial investors, they have a fixed time frame. Essentially they provide capital, I'm very clear on this. If some VC by luck you get who is also giving inputs on business, fine, but do not expect that. You are supposed to do your homework. You are the entrepreneur, not us. We are backing you, right? We are not going to run your business. So be very clear about it. कि यार ये VC आएगा, मेरे को धंधा भी दिलाएगा, पैसा भी देगा, मैं खाली execute करूँगा. That is difficult, right? Which means then you are not that in that company where I want to invest. If you expect me to do that hard work. So people tom-tom about all the value adds and all that, right? A lot of VCs, and they do it also, by the way. But that should not be your expectation. There are different types of VCs. They have their own thesis. That's where I'm saying you have to study the. So in VCs, stage-wise, I don't know if you know, there is a pre-seed, there is a seed. So we come in pre-seed, we put in generally about 1.25, 1.5 crores. After that comes your little micro VC who puts in seed checks, which is typically $500,000 to $1 million. And after that comes your pre-series A and series A stages where you're typically looking at $3 to $5 million. That is the early stage space. After that, you're pretty much probably a mature company and you probably would have found product market fit by then. Nobody finds product market fit at seed stage. Somebody is telling me if I've got a product market fit, then it's not a seed stage. Or typically he is not product market fit yet. It's very difficult to get product market fit. 4 customer ने आपका solution लिया है उसका मतलब नहीं I have found product market fit. That's just accident. So do not consider accidents as a rule. You have to consistently keep on adding more and more to be able to get that conviction that yes, now I have found a solution to the problem that the entire industry has, not just 4 guys or 5 guys. So very early in the stage, founders have that typical mistake of starting to believe that they have cracked it, right? That is exactly where the problem starts. So initially, yes, but then you have to keep on improvising and keeping on doing that improvement in the product or whatever it is to keep on getting that traction. At no point of time can you go like this. You have to continuously do this. Okay, let's just go ahead and see what does a VC look in a startup founder, right? Pretty much again, the first point is probably the most important point of all, right? The hustle, the ability and the agility and the fire. If you do not have this, if you want to run your family, your children and all of that, you'll have to keep them aside for a while because it takes more than your blood and sweat, this whole VC journey. So unless you're prepared for it, hard work, and also and be humble enough to accept that you are wrong. Sometimes you may be wrong in your approach. If somebody is telling you, then you have to listen to him or her. Because that's the guy who's giving you the check, right? If he's giving you the check and he's saying, look, this is not right, can you do this way? Either you prove yourself right or he proves himself right. Either of the right. There's no third way. So in either ways, if you convince them, then they'll give you the check. If not, then they will not give you the check, which means that something is wrong at your end. So you'll have to start navigating, right? Ability to pivot is very important in this business. Your problem statement has to be very clearly articulated. Sometimes the problem statement, most of the times the problem statement is not clearly articulated. And I can't probably explain to you, it's an individual thing, but again, when you are looking at the team, this is very important. When you are thinking about the team or your core team, first team that is going to be there with you all along, it's very important that you look at every aspect. You can't just be a product guy running a startup. You have to get a business guy who understands numbers, who understands strategy, who understands fundraising. If you have that early, good. But otherwise, you'll have to keep looking for that talent to add on to your team, either as a co-founder or as a key team member. Either way works. Co-founder वाला को थोड़ा ज़्यादा onerous responsibility है, team members को ESOP देना पड़ेगा. That's where all the ESOP thing comes, right? So I'm not getting into too many of those things because of time being limited with us right now. But yeah, get a team which has probably 360-degree capability, which means you should have done execution. I mean, try to get as much as possible. People who have worked in that field, people who know their shit, right? If you know business, then somebody else has to know technology. Somebody else has to know operations. Somebody else has to know finance. Because one founder, it's going to be difficult. For single founders, it is going to be 4 times more difficult, right? So that is very clear. It's not that solo founders, we've funded enough solo founders, successful guys, went ahead and raised. So it's not that. But the task is that much more difficult. So far as possible, if you can look for, from day one, understand what your lack of abilities is. It's very important to know what you don't know. Right? What you don't know, you should know. And try to look for somebody who has that. Of course, large market opportunity has to be, and by the way, when you talk about market opportunity, one very simple thing that I have seen which is ridiculous is India's population is so much. Out of that, men's ka product hai, so men's are so many, half of them are men, so they will buy. And that is my market TAM. Okay, if that TAM slide comes up, you've lost it already. If you have not narrowed down your customer segment to the T, and for that, that research and homework that you mentioned has to come. Who is your customer is the first thing you have to think about. Who actually is your customer? Then you will understand the TAM. Then only you can articulate the market opportunity. Otherwise, no. सर सब लोग घर खरीदते ही हैं तो सब लोग घर वाले लोग सब मेरे कस्टमर होंगे in your home improvement. No, that's not the case. The segmentation is very clear between affordable, mid, premiumization and all of that. Which customer are you targeting? तो उधर ही हो गया ना segmentation. So you can't go top down. You also have to go bottoms up. While top down is a good approach, but you will have to go bottoms up to find out who your customer is. And the TAM, SAM, SOM, etc. all has to get worked out from there. You have to know. If you're not, please Google, please learn, and then target the opportunity, because that is the first thing that the VC is going to see. Does he know his market? And yeah, I mean, you have to have some defensibility, some superiority against people who are already there. And by the way, people are there. So don't ever think that what you are building, nobody has. There are enough more people. If you get the names first and you compare, it is better for you. Otherwise, the VCs will give you those names who are doing similar work than you are. Then you have to go compare, do feature-wise comparison, do peer comparison table, features comparison. Everything will be asked. Right? So now you're getting to know, right, what a VC funding means. Yeah, and coming to the last point for today, I mean valuations, which is typically where most people get stuck. After having crossed all of this, by the way. So valuations do not first start. Kitna valuation milega? For that you have to answer yourself some of these questions that I asked you earlier. Then come to this. Right, so valuation is difficult, by the way, and early stage companies mein valuation is an art, not a science. Okay? So if you hire some CA or an CFA and tell him to do projections and do a DCF and discounted cash flow, it will not work. Early stage में नहीं होता ऐसा, क्योंकि there are no predictable cash flows, there are no traction to rely upon. So it's just an Excel sheet otherwise. Right? I can also come to like 100 crore valuation for an early stage startup. But वो देगा कौन ना? The Excel guy is not going to give you the check. Okay? So you have to be very clear about what it is. In absence of those, what typically the VCs rely. And by the way, I am of the opinion that the founder should never talk about valuations with a VC. They are the experts, right? You are the experts in the business. You just articulate your business and say, look, this is what it is, sir. अभी आप बताओ कितना valuation मिलना चाहिए. Best way to address valuation question from a VC. कितना expect कर रहे हो? बोला सर कुछ खास दिमाग में है नहीं, आप ही बताओ. What happens then? He has to do the homework, no, and come back. कि आपको कितना valuation देना चाहिए. And he has all the data points available. Even if you don't have, don't worry, let him work it out. Right? You don't get into the things saying मेरा 50 crore का valuation होना चाहिए sir. I have this IP, that IP. You just articulate your service offering, product offering and leave it to him. This is my traction, this is my experience. So all of this will count in your valuation in some manner or the other. If you are a 2x entrepreneur having done something there earlier, you've sold, I'm sure most of you have not, otherwise you wouldn't be here attending this session. But even if you have, that's a plus. Okay? Your educational background is definitely going to matter. Okay? Definitely going to matter. From where you've graduated, from where you have post-graduated, where all have you learned, where all have you interned. All of that matters, by the way. Which logos have you worked for in the past? Where all were you doing your jobs? What did you do in those jobs? Is that job helping you to in this startup or not? Right? Get it? Complementary skill sets I've already said. Defensibility IP. Unless you start with the defensibility moat IP, chances are that you will not get funded. So I'm not painting a disappointing picture here. I'm just making you aware of the reality. After you've done all of this, the picture is very rosy, like I said earlier. But these are the things they need to crack. And yeah, these are the common questions that you will get from angels, VCs. I think mostly both of them ask typically the same question. Ye valuation wala, as I said, the best tactic is to leave it to them. Because of the way you, yeah. You don't need to know. You don't need to know. You have to just tell him what you do. Give a detailed synopsis of what your solution is. What is your differentiation? Bring that out. But you are not the expert to value your own IP. Most of the times. You've created an IP, right? Something different, something new, something nobody has done. Right? If you're able to prove that, they already have the benchmarks of every industry, every sector, every startup that they have funded. They know how to value. Kabhi-kabhi kya hota? And there are some broad benchmarks while I'm saying this. Typically, it also depends on how much you are diluting in this particular round. If you're taking $1 million check, typically in seed stage, you end up diluting 10 to 12% in the first round. Seed round mein typically 15% tak you can dilute. But the question is, all this is very, very hazy, right? I'm again saying, the disclaimer is, nobody knows the art of valuation, not even the VCs. But if I have to give you the check, I will have to value you. Right? Because I want to own a particular stake in your company, right? I will eventually work out everything and then I'll take your help, of course, with all the data that you have. And I'll try to say, okay, fine, I'm giving you $1 million check. And this is the stake I want. You divide that, you'll come to your own valuation. That will not qualify for VC funding because if you are already profitable, why do you need the money for? They will not. Why do you need a VC if you are already profitable? Why the hell do you want a VC? You are profitable, na? पैसा कमा रहे हो ना? तो क्या दिक्कत है? हाँ? So which means you have a plan. You have a plan to expand. Either if you are in just Delhi, you want to go to south, you want to go to the east, you want to invest in growth, which is why the VCs are there. Then you have to. No, profitability is fine. The plan has to be in sync with your capital use. It's no problem. It's not a crime. Nowadays, it's actually required to become profitable. So वो change हो गया है अभी. But anyway, I mean the essence of it is I'm saying till you if you say I want $1 million, if you want $10 million, tell me where you are going to spend and in how much time. And what will you give me? The third most important, what will you give me if you spend this? If you get this money, what can I expect after 2 years, 3 years? Half the time people are not able to answer that question. Then VC won't come in because unless he's clear where his money is going, he's not going to invest. So you have to be very clear with your end use, which is where the expertise of a finance consultant comes in. You have to deploy, like आप recruit करोगे लोगों को, आप IP बनाओगे, you will go to markets, you will invest in growth, you will invest in BD, technology, all of that. You have to segmentize them and quantify कि हर area में कितना डालोगे पैसा. Till then you will never get money from VC. If you just say I want to invest in growth, sir, दे दो. नहीं होगा. So you have to be very clear. Your being profitable or not is not the only criteria. Your being profitable is just one of the criteria. What is more important is where my money is going. He is investing in the future. No, he is not investing in your past. He wants to know where his money is going. And if he feels that you already have the money that you need to expand and you're not able to justify the expansion plans, then he will not invest. That has to be a very sound plan. It has to be an executionable plan. It has to be a realistic, acceptable plan. You can't just throw Excel sheets and say, look, I need 100 crores, I can absorb 100 crores. That's why I said absorption of capital is very important. Not everybody can absorb capital. Believe me, if I give you a 100 crore check, you can't absorb it right now. So every funding has its stage, its rationale, its use and its outcome. Which is why you need series of funding. Every सब पॉइंट पे आप कर दोगे तो पूरा डाइल्यूशन चलेगा ना, 50% आपका पहली बार में ही गया. The problem of getting a higher check is you dilute more initially. Because your valuation is not as high, you are yet to invest. So valuation बनेगा नहीं. तो पहले से ही आप equity खो दोगे आपका. You get at a high level, right? Numbers aside. So yeah, I mean, understand angels typically invest smaller checks. They ask lesser questions, they decide much faster. With angels, HNIs, individual guys who are taking calls, family offices, decision making has to be faster. If not, leave them. Don't keep going into the hope of saying, okay, आज नहीं तो कल जॉब देगा सर, 3 महीना वेट करोगे. You will lose your edge, you will lose other investors का follow up. So angels and HNIs, family offices have to give you an answer in a month's time. Max. Otherwise, think of it as not interested. They will keep saying, अच्छा हाँ, we'll talk later. But अगर मुझे करना है ना deal, I will chase you. If I like you, I will make a call and make you come to meet me in my office. And I will give you the term sheet. So please understand this very, very clearly. If a VC is chasing you, a good sign. If an angel is not chasing you, it's a bad sign. If a VC is not chasing you, maybe not, but you have to keep on updating them. Right? At some point, he or she will get interested. At some point, that team will come back to you and say, look, and by the way, only if your traction is impressive. Please don't send updates which is the same update as the last quarter. There's no point. If you have not added more customers, if you have not added any feature, if you have not done something new, there's no point of going back to them because they are going to refer to their old notes and say, look, no improvement. So your time is wasted, his time is wasted. And they'll strike you off for next 1 year. So you can't even approach them after 1 year. Okay, so it's never like, I mean, it's very different, right? I mean, we see sometimes they do a deal in like 1 month, sometimes they take 6 months to do a deal. Less conviction, more data points needed, more conviction needed, more, I mean, they are half, they are not sure. I mean, they are human beings like us, right? You and me are all same. We also build conviction with data, with more confidence. I need to talk to you more often to get confidence in you. I need to know that you know your business well. And by the way, this whole due diligence about the character of a founder is very important. The due diligence is first on the founder, then on the business. In early stage especially. If you're doing 100 crores of business, then fine, you have already de-risked the company from your own self. Or probably more than that. You already have a team, execute ho raha hai, sab theek hai, founder, like what happened with Bharat Pay and all that. I mean, Bharat Pay will continue without Ashneer. Of course. You should. Every founder has to look for an exit eventually for himself because you have to create wealth for yourself. Otherwise, how can you create it for the VC? That is where the VC fundable business comes in. That's where the lifestyle versus VC fundable. A lifestyle business doesn't want to sell ever. Which means you don't have to get on a VC, right? VC will never come to you because you never want to exit. unless you are generating tons of cash and you are able to buy him out after 5 years, which is, let's say, rare. वो SaaS businesses में होता होगा, बाकी businesses में अभी तक तो नहीं देखा है हमने कि किसी कंपनी ने इन्वेस्टर को बाय बैक ही कर लिया. मतलब इतना ज़्यादा कैश है कंपनी के पास. No, see, till a VC is there, you anyway can't exit. But so while you are working on a solution, at some point, and by the way, I mean this is very, I would say out of syllabus here, but at any point of time, the business can be up for sale. At any point, the minute you think you are not growing the way you are growing, or the minute VC thinks you are not growing the way you are growing, then both have to go find a buyer for your own good. Let me tell you this. आपने जो प्लान बनाया अगर नहीं एग्जीक्यूट हो रहा है तो क्या करोगे? बंद करो ना या फिर बेच दो. दो ही रास्ता है और तो कोई रास्ता है नहीं. द अर्लियर यू टेक दैट डिसीजन द बेटर इट इज फॉर बोथ द पार्टीज बिफोर द डैमेज इज डन. salvage it while it is still valuable. Still there is some IP जो अभी तक किसी ने कॉपी नहीं किया है तो बिक जाएगा. अगर कॉपी कर लिया है तो फिर तो वो भी गया. Right? I think that's about all. And yeah, happy fundraising for those who are. That's all I have. Yeah, any question?
Some of the angel funds valuation which they have quoted, or some of the VCs. So there is a certification, or how do we trust the valuation given by the VCs or angel funds? Because not everyone believes in the valuation quoted by them. So
Yeah, I mean every round के बाद जो invest, see, if you approach me, I will look at your business the way I want to. You may have got funding initially, which is fine. I may think that that valuation was high. Somebody gave you a high valuation. I don't want to give you that valuation. So I will quote a lower valuation. So it's all very relative. It's how I'm valuing your business. If you've done the good things right, you've met the milestones, you've grown well, there is no reason why you should not expect an upside to the previous round.
Sure.
It's natural, right?
Sir,
Somebody put in 5 crores, you made that business 5x. How can you expect to raise at the same valuation? If that guy wants to invest at the same valuation, you have to walk out. A lot of Shark Tank people walk out, right? They don't take. Very clear.
but sir, sometimes name also becomes very important. Like if I am raising from 100x VCs, so it's
No, that's a little bit of a. I mean, yeah, it does. It gives you a little bit of credibility, right? If 100x has funded you, or let's say Piyush has funded you, or an Aman Gupta has funded you, it will give you some credibility. But it will not give that check to you. They will still want to see the business. They will say, हाँ यार अच्छे लोगों से पैसा लिया है, मतलब उन लोगों ने डिलीजेंस किया होगा, अच्छे लोग हैं, बस उतना ही है उसका वैल्यू. और अभी हम लोग ने भी करते हैं तो दे नो कि हाउ डू वी कोच आवर फाउंडर्स, हाउ डू वी ट्रेन आवर फाउंडर्स, व्हाट वैल्यू एड वी डू. सो दे नो. सो दे एक्सपेक्ट, compared to anybody else who is not getting funded, you are obviously at a high, at 2 points more. But that's all. That doesn't give you the decision in your favor.
Sure.
I still will see the business, I will still talk to you as much as I want to, even though you are funded.
Sir, one more question, sir. Sir, I would like to know, sir, the series, sir, how a startup founder should approach, sir, like for seed funding, then series, sir.
I just said, right? So,
Starting
if are you bootstrapped or not?
So starting, sir, like.
So pre-seed, typically, I mean, the way we look at founders is we want bootstrap founders who have not diluted. So typically our check is, let's say 1.25 crores for, let's say whatever 15%. We'll take X valuation and give you a standard terms. First of all, we don't get into this valuation business because of these problems, right? We give a standard term sheet. You take it or leave it. It's very clear. Because there's no value in the company yet. You will create value in the future. After that, a seed round typically ranges between $500,000 to $1 million or 2 million sometimes, depending on which founder, what company, what space. After that comes your pre-series A, which is typically 3 to 5 mil or 2 to 4 mil. And after that is your series A, which is typically north of 5 mil. Right? At every stage, you will end up diluting between 15 to 25%, roughly, rough math. So now you take the Excel and start plotting. Then you will know at series A you will typically be 55% because you have to create an ESOP pool. Every investor will want you to create an ESOP pool. पहले से, है ना? बाद में एम्प्लॉय बाद में ज्वाइन होगा, लेकिन किटी पहले बनाना पड़ता है. So that's how it works. And Series B onwards, of course, you will get less than 50%, but you will still have controlling power. You will still run the business. The control is in your hand. That you have to ensure. VC थोड़ी run करेगा business.
So last thing. Sir, how should a founder approach, like, sir, what is the series? Sir, bootstrap, then friends and family, angel, VC, or
Yes.
private?
Yes.
So this is the series?
Yes. Typically, first, if you are starting up, get whatever checks you can squeeze out from your family and friends.
Family and friends.
Make them give you some money, right? Garner their faith first. Because they are your closest believers, let me call it this way. If they don't believe you, then you are in any way trouble because you're expecting some funding from them. Either family, friends, because you need some money to work on your solution, right? हवा में से तो solution नहीं बनेगा ना. तो वो पहला वाला थोड़ा push चाहिए. उसके बाद अगर थोड़ा कुछ कर लिया तो then people like us come in. Like we evaluate pre-revenue companies, pre-product. We have invested in SaaS companies which are not even ready with the product. But then that's our expertise, right? That's where we come in. All right? Okay?
Sure.
Thanks. Thank you so much. Yes. All that you saw was that only. Whatever you don't have is a no. So I think people with malified intention of not, I mean that thing is something that I can only know when I'm talking to you, right? If I ask a few questions and if I don't get the answer I'm looking for, then I have a serious credibility problem. Credibility problem is the only thing which is a zero tolerance for a VC. If you're not able to come out as credible founders, then no matter how brilliant business you are doing, because ultimately it's the person behind the company that is important for any investor. उसका नियत सबसे important है. If you do not understand all of this, then there's a credibility issue, right? Either you are too naive or ignorant, which again is a problem for the VC. You need to understand all these things, otherwise you can't take a check from the VC. It's very clear. So those are the issues which are going to give you a no. You may be a nice person, but you don't know how to raise funds. It's a problem with the VC, right? वो तो दे देगा, उसके बाद का राउंड कैसे करेगा? He can't train you day and night to raise, right? जिसको नहीं पता है फंड रेजिंग, उसको नहीं पता है, उसको सीखना पड़ेगा. You have to invest time in fundraising. Fundraising, by the way, is a full-time job. तो अगर आप ये समझ रहे हो कि फंड रेज हो जाएगा, बिजनेस भी चलेगा, तो सीरियस प्रॉब्लम. हाफ द फाउंडर्स कांट मैच दैट बैंडविड्थ. क्योंकि 50 लोगों को बोलोगे तब जाके एक जन हाँ बोलेगा ना, तो टाइम बहुत इन्वेस्ट करना पड़ता है. डू यू हैव दैट टाइम? You will have to, or biggest quality of a founder is learn to say no, learn to accept no for an answer. If you can't accept rejections, you are in this wrong business. There will be 100 no's before one yes. So if you can't handle that, don't start up or don't raise funds from VC. Raise it from your friends, family, folks who can, गाली गलौज करके भूल जाएंगे लेकिन माफ़ करेंगे. वो नहीं होएगा यहाँ पे. Yeah?